Everybody, I'm Jeremy Davidson, the chair of the Education and Events Committee for SFAR, and very excited about today's webinar, talking about condo clarity, how we can find clarity with the new lending requirements by Fannie and Freddie in our very tricky and twisty-turvy market. Really happy that Rob Edwards on our committee was able to put together this wonderful panel of lenders. I will let Rob take it away with the introductions, and we will have some time at the end of the panel for Q&A. There is a Q&A at the bottom of your Zoom screen, so do not hesitate to put your questions in there. And if time permits, we will weave those questions in throughout the presentation. So thank you for being here today.
Hey, thank you, Jeremy. Hey, Rob Edwards here from EXP in San Francisco, and we saw this news come along around 2 months ago. I'm sure you've read about it, and I thought we should have a educational panel on it. So I'm on Jeremy's education committee, and we put this together in the last 6 weeks. What I did was is I took the list of all the loan officers that are members of SFAR and or donors or sponsors, and I asked who would like to speak on this topic. And there was about 20 people to begin with, and here we are narrowed down to 5. And these are the people that raised their hand and said, "Hey, I know a lot about this," or "I'd like to participate," and here we are. So allow me to give you some brief introductions. Um, Michael McHenry is going to kick us off. Say hi, Michael, so you appear on the screen if people have their configuration already.
Hello, how are you?
There you
Good
go.
morning.
Michael's the city. CJ Curls with Rate.
Good morning, everyone.
Adam Johnson with Success Lending.
Morning.
Amy Lynn with Pro Mortgage.
Good morning, everybody.
And Julie Shimate with Golden One Credit.
Good morning, everyone.
Oh, hey, Julie, there you are. Nice to see you. So how it's going to work is Michael's going to kick us off and explain the scenario, lay the foundation as to what transpired with Fannie and Freddie and condo loans. And then the panelists are just going to interact, and we're going to treat this like a mastermind, less so than a strict sort of panel with slides and some sort of process. Each panelist does have 2 slides, and so when they want to call them up, they're just going to say, show me my slides, and Genevieve is going to put them on the screen. But we're going to treat this like a mastermind and just sort of roll with it. And so one of the things that we want you agents to take away from this is to understand what happened, what is going to happen, and then each of the panelists have been sort of prompted to give us some advice on how we as agents would go forward and look back at our past clients and our current clients and say, hey, to their HOAs, did you know this occurred? And here's some advice on how to prepare yourself for the next sale in the building, whether it's yours or someone else's. You should take this information back to your HOA committees, the treasurer, the president, etc., and make some alterations, because it's going to make it difficult to sell in certain buildings if the HOA doesn't have all their ducks in a row, right? So that was the charge with the panelist, is to give you some value and give you a little bit of direction based upon where they come from. Okay, sound good? Michael, do you want to kick us off? And Genevieve, do you want to put Michael's slides up?
Sure, yeah. And Genevieve, whenever you can post the slides there. Awesome. So yeah, I mean, I'm gonna go over these kind of quickly here. These are kind of some of the guidelines that I noticed on the selling guide for Fannie. One of the good news is that the 2 to 10 unit projects no longer need any type of project review. So that's actually good news for the smaller condo units or condo projects and certain property management companies that maybe manage those. So that is actually some good news there. The next piece right here is the limited reviews, unfortunately, will be fully eliminated by towards the end of August. So really, it's going to be either a full condo review or it's going to go, depending on the lender, an unwarrantable review for condos moving forward. And then the next piece here is the reserve requirements. I think this is kind of this is going to be a kind of a big one for certain condominium projects that are already struggling to meet the 10% reserve requirement. Now, we do make exceptions on that already, but when it rises to 15%, that could be some definitely it could come into some issues down the road for certain condominium projects. Next piece, kind of the litigation documentation. Now, this is kind of, again, I kind of collaborated with my condo team, but they said no exceptions. Usually we need full documentation on this if it wants to be Fannie Mae approved. Now, again, this is where non-warrantable comes into play. And where we have to weigh the risk factors, right? So if we're meeting kind of the reserve requirements and some other items, but there is a slip and fall, and actually I'm dealing with one right now, but we have to double check to make sure, for example, the slip and fall that the insurance is going to cover it, make sure the liability coverage, everything is there. So that's a little bit interesting because again, some of the HOAs or property management companies, when you start asking questions about the litigation, they push out this privacy claim, and that's becoming more and more problematic. So the more kind of cooperation we can have, and the more kind of information we can, find out, it helps resolve the issue. And then the critical repairs. This is something that I think we all saw coming as it needs to be kind of completed. These balconies, inspections, and other items have been kind of floating around for almost, roughly 2 years now. So I think Fannie's coming to a point where those should be done, uh, you know, um, and no exceptions on it having it being planned out 6 months to a year later. The construction defects and deferred maintenance, again, from a Fannie side, they're very sensitive on that, and I think that usually they won't touch it, especially if it's not completed. But then again, that's where the non-warrantable piece comes in, and if we have to portfolio it, if there is a plan in place and it makes sense, we'll make the exception on it. And then Genevieve, if you can go to the next slide there for me. And so this is kind of what we need here at Citi. Again, each lender might be a little bit different, but these are the usual items that I recommend my agents to try to obtain. The condo questionnaire. We have our own questionnaire. Again, it's not something that we usually need. Fannie Mae's questionnaire is perfectly fine, but a lot of the time, what we find out is there's a generic one on there. And that usually just causes more questions that need to be asked, which just kind of delays the process, right? Because then you got to reach out to someone that might not be in the office or might be, I don't know, a little agitated because we're asking these questions. But, if we have the right questionnaire in place to answer some of these questions, then we can kind of just move a little bit more seamless. Current year budget, that's just standard pretty much. Master insurance policies, that's pretty standard as well. I would say one thing that's missing from this slide for the insurance policy, for the master policies, is that Fannie is now accepting actual cash value for roofs, and not just replacement costs. So that's actually a win, I think, for a lot of condominium projects. Meeting minutes, that's also something usually a little bit standard in litigation documentation. Again, goes back to as much as we can get information on there, then we can, make a comfortable decision from there. And then the reserve study, financial statements, that kind of just goes in hand with the current year budget to see where we're trending, to see if they're going to meet the reserve requirements, are they budgeting for it, or if there's any large maintenance or construction bills coming up, or anything else like that. And so, yeah, that's pretty much what I have for you guys. And let me know if you have any questions about it.
Thank you, Michael. Great. Would any of the panelists like to add or riff off of what Michael produced there?
I think one of the biggest things that I run into in San Francisco is that SFAR has a condo questionnaire that is not acceptable to lenders. So therefore, a lot of agents will think, okay, that's enough. That's all that we need. I think what the big change needs to happen now is that the agents really need to vet the condo project before they list the condo project. And the documentation that Michael just said that we needed, they should be getting that. We should be getting that up front, because you're just going to run into problems down the line if you're waiting until after they get into escrow to vet the condo project. So you need to get the condo questionnaire from a lender. You need a current budget. You need the year's financials. Reserve studies, we're a little looser on that one than I think City is. When I talked to my condo department, they said, you don't want to put that in there unless you really need it in there. So if they don't have the 10 or the 15%, then at that point you may want to put it in there, because you could actually end up using less. But they said if the reserve study gets thrown in there, it may show that they need even more funds that they don't have set aside. So that could run into a little bit more of a problem. So I would do case by case on that one, kind of like look closely at it before you throw that in. Insurance is important. The meeting minutes for the last 12 months, any special assessments, litigation disclosures, structural engineers reports for the last 3 years, and any building inspections for the last 3 years. So, I mean, most of the condo projects will not answer all the questions. That's why we need structural engineers reports and building inspection reports. So that's, I think, unfortunately, I think that each agent needs to, come up with their checklist. I saw a lot of people shaking their heads that they kind of agreed with me, but it's just what we need to do. We need to start early.
There might be some dovetailing into the forms committee, I feel, in the next few months. The forms committee of SFAR might want to meet with you all to say, hey, how are we not completely serving our population, right? Our membership with the forms and maybe some instruction. That's just an idea. Dan Hershkowitz, are you on the call? I'm sure you have some things smart to say about this before we move on. He's going to be here. I know he is. Anybody else want to comment on CJ and Michael?
You know what? I'll
Yeah, I can.
Oh, go ahead, Julie.
I'll be quick, Adam. Yeah, I can just add to that, because the Fannie Mae form is Form 1076. That's the full review form. I love CJ's recommendation, because the disclosures in the seller's package don't answer all the questions that are on that Form 1076. If that could be added as part of the disclosure package, that's half the battle for lenders, is to know what that form says. That would be an amazing addition to sellers' disclosures. And as I was doing some research for, on my slides, I had indicated, the first thing that I do is I check the condo project manager to see what that tells me about an existing project. I noticed that there's a way that HOAs and realtors can have their own access to that same information without having a Fannie Mae account. I'll go ahead and share that link that I found, where everyone can sign up. They can have access to what information is available through CPM before your listing, or helping your buyers navigate. So that's it.
Great. If you could put that in the chat. Thank you. Adam, go ahead.
So yeah, I mean, CJ kind of hit on the stuff that I picked out that I thought was important. And if you want to go ahead and throw my slides up real quick, I just sort of did a little bullet point thing that can help people with a checklists.
And you put together a checklist specifically for buyers reps.
Yeah. Can I get my slides up?
Genevieve, are you there?
I'm here. I'm just going through them to find the slides. 1 second.
The first one has a black, green, and purple header, kind of.
I got it.
So this is just something that I put together for my agents. This is something that I can give them, that they can keep in a listing presentation book or keep in their file folder, so that they have just a quick bullet point. Hey, what do I do? And backing up on what CJ talked about, Before you even go and show a condo, take 2 minutes, look it up. Go on Zillow, see what it is. Pull up the preliminary title or pull up a property profile. Make sure it's actually a condo. One of the things that I run into periodically is that agents list properties as condominiums, and then we go in and look at it, and it's actually a PUD, planned unit development. And a planned unit development doesn't have to be approved. It doesn't have to follow all these guidelines that have changed. So take a couple of minutes, do that. When you go to the listing and you meet with the listing agent, ask them specific questions. Ask them these specific questions. How many units are owner occupied? Is there a pending lawsuit? Are there special assessments online? Do they have the HOA financials? You do two things by doing that. You're standing there in front of your buyer and you're positioning yourself as an expert in the marketplace because you're asking this listing agent things that the listing agent should know. And if you're a listing agent, you should have this information available for your buyer's agents when they come to look at the property. And then before you go to write the offer, get a hold of your LO. You should have that conversation early on before you even write the offer so that the LO can have the conversation with you about what's the condo complex that we're dealing with. Does it fit into the guidelines that we have to do a review of it? And what do you have in the way of documentation that's going to help us answer those questions? Next screen. Next slide. There you go. And then again, this is just sort of a bullet point thing here. If you can get all 6 pieces of this information and provide them to your loan officer who's got a pre-approved loan for your borrower, this is going to eliminate 90% of the issues that you could possibly run into relating to a condominium. And you don't have to have all of them, but you definitely need to have the project name and address. The HOA insurance certificate is so awesome to have up front because you can definitely run into holes there where they don't have enough coverage. You can review the roof piece, make sure that they have the cash value coverage on there because that's going to become a more specific guideline that's not going to be able to be waived or worked around because they've already reduced the requirement. So any of these things that you can have that you can provide to your LO is going to help the LO prepare you to make sure that you've got a good, solid, pre-approved borrower when they step in to go do the deal. And that was really my whole thing was I just wanted to talk about positioning yourself as an expert in the marketplace in front of your borrower and in front of the listing agent and potentially the seller so that when you put your offer on the table, your offer is the one that's going to be selected because that seller and that listing agent know that you have got all your cards in order and that you know what you're talking about. So that's all I got.
Great advice. Thank you. And these slides are all in one deck, and I'm going to put a link before we're over here in the chat so you can have it. Amy, you had your hand up.
Oh, Adam did a really great overview, and I want to echo what Adam and Julie just said. I think summarize, everybody would agree with me on the panel would agree with me that it is to actually start working with your trusted LO early on. Because I think in this market, lendability actually drives sales and drive closings at the same time. And a lot of the things like what Adam shows on his slide, it is quite a lot of work. A lot of them actually can be assisted by your trusted LOs. And it's always, always great to have, a trusted LO in your back pocket. If your buyers decided to work with their lender and something, go haywire, then your trusted lender is ready to come in and close the deal for you. And I think that would be a very good part of the preparation.
Great, thank you. Michael.
Yeah, I would have to say, great point by Adam and Amy. There are several different ways to kind of make the process seamless, right? I mean, teaming up with your LO, like I have certain agents that will reach out to me when they have a listing in a condominium project. We have an internal database, a lot of lenders do, where we can run it and see if we've done a deal there in the past. And if we have, then we can get some information to them pretty quickly. or if they want a preliminary review, if they're, if they trust you enough to bring the condo disclosures. Obviously, it's, we'll keep that private, but we'll also bring that to the condo team and get that kind of pre-approved, right? And so once it's approved in our system, generally it's 6 months to 9 months. It's pre-approved without any other documentation. So there's definitely a lot of ways to make it easier for sure.
Great. Julie, in the chat, folks are asking for the link that you mentioned. Shirley, I'm looking at the Q&A that come right to the panelists. Shirley has a question. If an individual unit doesn't have a balcony, but some units do, must the state requirement be fulfilled anyway for that particular unit?
Yes, because it's about the entire project. It's not about the unit that they're in. So it's about the health of the building, not the health of the specific unit.
Got it. Here's a question I had in Michael's first slide from Karen. When you say reserves need to be 10 to 15%, what is that of? 10 to 15% of what? And is there a certain price range that properties fall in or out of this Fannie Mae rules? So is there a price range, or is this apply to everybody? Anybody have that
It's
answer?
going to apply to everyone, and the 10 to 15% is 10% of the total HOA dues for the year, or 15% of the total HOA dues for the year. As for the dollar amount where things fall out, Fannie and Freddie, I mean, there are Fannie and Freddie limits, but non-conforming lenders follow Fannie Freddie the majority of the time. So you're stuck in the same cycle no matter what. And just remember, this is for projects that are over 10 units. So therefore, there's a lot of projects in San Francisco that this does not apply to. This applies to the big projects that are more than 10 units. If it's 10 there's this little stipulation from 5 to 10 units. If that building is part of a bigger complex, so sometimes there's sub, HOAs within a complex, then it defaults to needing all of this. But if it's just like a 10-unit building in San Francisco that's all by itself, it's not going to fall into these guidelines.
So you might run into a situation like up on Diamond Heights, where there are multiple buildings in one planned unit development that run as one HOA. They might have an incentive to split up into 2 or 3 to get
So
below.
that's the thing. Fannie and Freddie is not going to let that happen.
Got it. Okay, well, strike
Because
that
they
off your
have
to-do
builders
list.
out there that are like, let's cut them all up into little pieces to make it easier to get it approved. Fannie and Freddie are on to that, so they're not going to allow that.
Good insight.
I want to add
Good
on to
question.
that. For the balcony questions, there are programs out there that actually lender would actually willing to take this sort of risk, and actually their condo questionnaire are different lender from lender, like Michael mentioned earlier. So there are lenders, they're not even going to ask about balconies questions. So those are, I mean, like there are a lot of flexibility out there if we just keep on looking.
Got it. Thank you.
And then I
There's
was
another
just, oh, sorry, go ahead.
No, go ahead, Adam.
I was just looking in the questions and answers, and it says it was Maggie said, just to clarify, same rules applies to townhomes. And Maggie, that's kind of where I was talking about, where you want to look at the title and see how the townhomes are titled. If they're titled as a planned unit development, then none of this applies. If they are titled as a condominium complex, then they do apply. We're talking about a way of holding title, not a specific construction method or a style of building.
Got it. Nisha
And
asked this question.
responding to Rima's questions, your lenders or any trusted lenders would be willing to work with any listing agents to prepare you to help you to sell the condo. Absolutely.
I think that's something that a lot of us don't know as agents, to engage in that way with all of y'all, right? That you can be our shepherds and mentor us a little bit more than we normally ask for, right?
Yeah.
Here's a question from Misha in the chat. What's the interest premium a client would pay for a loan on a unit in a non-warrantable building?
I think every lender might have their own, uh, kind of process on that. Usually it's really fitting it into a different product. So for instance, for City, it's going to be portfolio, which would be non-conforming or jumbo, right? So if let's say the loan amount is 500,000 or something, but it needs to go non-warrantable, we would put that into our jumbo product, jumbo pricing, which technically would give the buyer actually more benefits on our side, but they have to qualify it based on it being a jumbo loan over 1.250, right? So yeah, there's pros and cons to it.
Let's go back to the 10 to 15% issue. It's moving from 10 to 15%, right? It
Not
was 10, now it is 15.
not till January.
Not till January. And it's 15% again of what?
The HOA dues, the annual HOA dues
The
of
total
all units, the
of
total
all the
for
units,
all
right?
HOA dues for the condo
And
project.
and how would an agent find that information?
Budget.
Financial statement. Yeah.
Okay.
That's one of the things that a listing agent should jump. I mean, the day that the listing agent goes out and takes the listing, they should be getting into the budget and the reserve question at that time, because HOA management companies and mom and pop HOAs are very difficult to get response from. And when you get into a big HOA management type situation, a lot of times they're going to charge a fee for that stuff. You need to know all that stuff right away, what you're dealing with. And that's just a simple conversation to have with your listing client as you're taking the listing, that you need to be in contact with your HOA management company. We really need the financials. We need the insurance policy. We need the budget. We need the reserve study. Get those things up front. It's just going to save you so much brain damage, and it's going to eliminate so many questions. I was going to throw a quick statistic out there that the last reporting period, 18% of all sales in the United States were condominiums. 18%. And 1 in 3 had some sort of a lending hiccup on them that was related to the HOA company, the HOA this entity. And then that 60% of agents that write offers don't even bother to do any of this work. So just these basic things are going to put you so much higher up the food chain as far as what a professional real estate agent does on a daily basis. And they're simple things to do, and they're really easy.
Great. This is statewide. This is national, right? This isn't just SF or California, all of this?
Correct.
Correct.
Right. Okay, so tackle that one in the
We're
chat.
just affected with the balcony issue here in California.
Right. So let's go back to that balcony issue, since I know this is not inside the realm of what we're talking about here, but the balconies. How often does an HOA need to inspect? What was the deadline? How many years in between? Does anybody know that off the top of their head?
It's a good question.
Pull up the guideline.
In
I
the
think
condo questionnaire, they ask for, have the HOA done any inspection in the past 3 years? And that's Fannie's guideline. And California's, the SB 326 actually is only applied to the state. So by now, of course, most of the HOA have, I would say 95% of the HOA has done the inspection. But the thing is, if just so happened the HOA has not done the inspection, you just click no, and Fannie won't ask you further questions.
Oh, so it's not mandatory?
That is mandatory for California.
But if you check no, it's not going to have an impact
Because
on what?
if there are still, I have just recently handled a file that the HOA has not done the inspection, and then they checked no, and then the file actually went on really smoothly, and that is a Fannie guideline.
I would suspect that 50% of the 3-unit Victorians in this city are not even aware of this rule, right? And let alone addressed it, right?
Hey, Rob, on that
Yeah.
note,
Go ahead, Julie.
one of the questions that I've seen come up in the chat is, let's be clear for everyone on this call, the new guidelines say with 10 units or fewer, there is a waiver. None of this stuff applies. Not the reserves, not the condo questionnaires. It is a waiver of review for these units. So this is a win in many ways for these smaller projects.
Absolutely.
So, and then what Amy was clarifying is there's Fannie Mae rules, and these are for every state, not just California. The SBA stuff, that's state specific. So if that HOA hasn't completed that inspection, they say that they haven't, they don't have any inspection reports, and we proceed with the review as we normally would without those things.
Didn't somebody say there were special considerations for 5 to 10 units just a few minutes ago?
So the rule was that 2 to 4 units always had a waiver. So what Fannie Mae just increased was from 5 to 10 units. So now it's from 2 to 10 as opposed to just 2 to 4. So therefore they've expanded it.
Good to know. And people are asking in the chat. People are asking in the
Still,
chat. You'll have the
still
names of
means they
everybody.
need the master policy, though. The master policy is still required to be reviewed. So don't think that that needs to be waived.
And when you say master policy, Michael, expand on that.
The master policy for the entire project, right? So if it's a 5-unit, 10-unit building, sure, we don't need the budgets, we don't need, the reserves, everything else. We don't need to verify, the condition, like the balconies and stuff like that. That's not something that we're going to ask for, but it is required to check to make sure that the master policy, basically for the exterior of that building, that has the proper coverages to meet Fannie Mae's requirements.
Got it. Thank you. Anybody else want to add something new or go on? With 25 minutes left, this might be the opportunity to work on the second topic, which is how would you advise agents reach back to their past clients? What sort of process? How would they go and do that? How would they explain if they know past clients are on an HOA board or the president or the treasurer or just in the building? How could agents provide some value back to their past or current clients and prep them? And how could a loan officer like you or any of you be a part of that process? Is it worth your time? Would it be exhaustive? Is there a process in place? I know there's probably somebody else thinking about this besides me, is how do loan officers and agents come together to go to those buildings and say, hey, here's an idea, here's a framework, here's some bullet points. What do you think?
I think it would help everyone if they talked to people who are in condo projects, because the more people that know about this, I think the quicker things are going to get done. And it's all about the health of the condo project, and health has a lot to do with the reserves, apparently, because that's what Fannie and Freddie feel as though they need to support a healthy project. So, just, telling them that they're looking to make sure that they have sufficient reserves to handle anything that could be happening in the building in the future.
Does anybody have any idea how this came about? Is there any sort of political or economic recent history that caused this to happen? Anybody have that backstory? Just curious, not that it's super important.
I think all of this started when that condo in Florida collapsed because there had been so much deferred maintenance. That triggered because it used to be for a limited review, we weren't asking anything about structural integrity or deferred maintenance. Really, it was like occupancy, litigation, that's it. And so they changed the rules based on that. And I think that what they're realizing is the crux of that problem was about money, about insufficiently funded HOAs were creating this problem. So I think that this is all from that.
Insurance folks probably had a little hand in it too, right?
And that circle back to what Rob you said earlier. I think it's critical for realtors to start partnering with their lenders and actually approach the HOA. And sharing information is important at this point. And in fact, I went and talked to the HOA manager in Millennium Tower with my lender, and showing them, what kind of program is available for their owners in the building. And they are one of the most significant cases of San Francisco. A lot of the lenders knows about the situation, but there are, you know, if you share information with HOA and actually prepare lending guidelines for them, and their owners really appreciate it, and that could really help the realtor to actually gain more listing in the property.
Mm-hmm. Michael?
Yeah, and I would piggyback on that getting a hold of your old clients that you sold condos to and work through them to see if you could actually come to a HOA meeting and present to the meeting, you and your loan officer, and present this information to them as a subject matter expert. And then that's going to put you in a position to build the relationships with more of the owners in that particular complex and potentially get further listings going forward.
I think another, just to kind of circle back to what you were asking about the reserves and everything. I think one of the biggest things is special assessments, right? I mean, if you don't have some of these projects don't have enough in reserves to meet certain requirements, then you have an experience where you have your buyer, let's say, buying into a property that they're low on reserves and they have some heavy construction or maintenance coming up, and then they move into this property and they get a special assessment from the condo from the HOA for $20,000-$30,000. It's just not, it's just not good, right? So that's just another way of making sure that everyone is aware of, what is the financial, condition of this actual project. So.
Any of the loan officers that haven't had their slides on the screen, would you like to speak up and have Genevieve put those up there if you want to cover something that wasn't covered?
Sure. Yeah, I would love to.
Genevieve? Julie's are the last on the list, I believe. The last three yellow.
And I will be quick. With Golden One, and somebody asked about the links to the forms that I had talked about, and I did include them, but my chat's not going beyond the hosts and panelists. So I hope that Rob and your team, if you guys could share those forms, I think that might be helpful for you agents to see what the 1076 form, what questions are asked by a lender. And then the CPM, I'll create an account for that condo finder, but what I expect is it's going to give you the same information as what I talked about. So the first step with Golden One is check status with the Fannie Condo Manager for us, unlike other, probably like all of the rest of the panel. If there is an unavailable or ineligible status, that is a non-warrantable condo, and Golden One that's a hard stop for us. We don't do anything non-warrantable. Secondly, the way that we do it is we have to use a third-party vendor. So it doesn't change our process with this limited review versus full review. It's the same form. It's just looking for more information now with the full review. So our process will not change, and we will continue to use Condo Tech as our vendor for condos. And unfortunately for us, that means I have to set expectations that it might take us a little bit longer to process a condo application, because our third-party vendor, I can't rush them like I can rush an underwriter, unfortunately. So turn times can be up to 2 weeks to get the documents that we need, and then that's why we're asking for 30-day escrow. So that's how it is to do business with Golden One. But if you go to the next slide, these are my tips on how to work with the HOA is, for any time you have relationships with a client who's part of their HOA, or a client who's ready to make a move with their condo, knowing about these changes is the best service that you can provide, is educate them about the changes in the process and how it may help or of course, I mean, it's not probably going to happen. If it's a smaller project, then it will. But if they're in a larger project, what is this going to mean for them? And what are the things that they should be looking out for, which would be the reserve requirements for the budget, the insurance coverages, and any deferred maintenance. And then my next tip especially is, just like with Michael said that City maintains a database of deals that they closed, I think HOA should be doing the same thing. They should know who's closing deals in their project, so that if they have a buyer or a seller who's having problems, they can say, hey, here's a list of who's closing deals. And and that's a great reason for HOAs and agents to work together. And then, of course, as agents, just educating buyers about how deals might go south. And then, like a lender such as myself, where if I find that I have a non-warrantable condo or I have a litigation issue that I can't work around that weren't aware of up front, having a plan A lender and a plan B lender is always a best practice.
Great input.
Rob, can you put up my second slides that talk about realtor strategies?
Great. Yes, Amy.
I want to piggyback what Julie just talked about, plan A and plan B, and the second one strategy.
So the next slide, Genevieve.
The next slide,
There you
Genevieve.
go.
Thank you. So I want to point out one thing, warrantable and non-warrantable condos. And today we talk a lot about 1076 form. Again, they are not created equally in the eyes of different wholesale lenders. So some of the lenders in their questionnaires, everyone have their own questionnaires. Some of them I mentioned about they don't ask about balconies, they don't ask about reserve, and it depends on situation. And that's why your independent broker would guide you to the lender that fits your scenario the most and fits your property the most. That's why I talk about you have to start working with your lender early on. So you actually pre-approve for buyer's agent, you pre-approve your buyer, but also you actually have your lender pre-approve the property for you. And then make sure then the rest of the process is seamless.
Got it. I have a question for you, Amy.
Sure.
From Katie. Why would a buyer's agent ever advise a buyer to get pre-approved with a lender where the limitations are known? Do you offer lower interest rates as an accommodation, for example? Does that make sense?
Lower interest rate as accommodation for what situation? I didn't get that part.
Okay, so for the Golden One loan officer, why would a buyer's agent ever advise a buyer to get pre-approved with you knowing your limitations? Do you offer lower interest rates as an accommodation, for example?
I mean, we have very competitive rates. It's not that we're giving special low rates for condos that we can actually close. I mean, I'm just being honest with people because I'm pretty transparent that process is a little clunky. Many lenders are going to do it better than us. I'm just quite good at my job. We have very competitive loan options. So people do want to do business with lenders who are competitive. And I close 70% of the deals that I get. But that's where I'm saying, like, if we can do better upfront, I don't want to waste any buyer's time with deals that I cannot close. Nobody wants that. So the more homework that we do upfront to know if we're going to have a problem, we can avoid those situations.
Got it. Who else would like to jump in and take us somewhere new or revisit?
Can I just do a quick summary of what I think is the crux of all of this? That limited review has been in existence for years, and that's going away. All right, so we need to understand that any project that has over 10 units is a full review. So all the documentation we're talking about is going to be needed. And I'm going to tell you, probably 80% of the time, it wasn't needed on any of the existing transactions that people have done in the past. So that is the huge thing that's changing. And that's why it's so important for a listing agent to get this documentation up front. And I know a lot of HOAs have all of their information online. And if you are a member of that HOA, so you are the seller, you can go into your HOA's online portal and actually download almost all of the documentation needed except the HOA questionnaire. That's the only thing that's probably not going to be available to you. But that's you can do it up front. And we as a lender, I would look at that up front. I can submit that to my condo project department. So if you're listing a property, you can say, all right, you've got the documentation needed to get this condo project approved. So therefore you can check one thing off your list.
I could almost see in the future, like a year from now or even sooner, that a listing agent will not just have one flyer at the open house recommending a lender, but one or two or three that have already done all the work on the building, much like a brand new sales office would have, where B of A is there and somebody else is there, like for new construction, like these three lenders have approved the project. I could see this happening for all these buildings over 10 units, that the listing agent is really putting forward a loan officer that has already done all this work rather than relying on the buyers coming with someone from even out of the area or wherever that is unprepared. Can you see that happening? I could see that. No? Okay.
It is happening now. I attended a lot of the open houses with my listing agent partners.
Yeah.
And
Yeah.
actually questions do come from buyers because some of them already heard from their grapevine saying that, they are having trouble when they try to buy a condo. So it is always helpful to partner.
Yeah. Yeah. I'm just saying in years past, like whoever provided lunch at the first Tuesday tour was the flyer that stayed at the open house for the duration of the sale. There was never, there's not a lot of other sort of like, back and forth or uh, sweat put into that relationship. We got 10 minutes left. What else have we not covered? Who else would like to add some more value here for the agents? What other questions do we have? We haven't had a new question in a while. Is there anything about TICs in these rules?
Fannie
No.
Mae is not warranting TICs at this point, so the answer is no.
So who isn't?
Fannie and Freddie Mac do not finance TIC properties.
Right. So TICs
In
for the
California.
win for a change. Right.
And we wholesale lenders do that, EIC financing.
Mm-hmm.
It used to be Sterling, but they're not in that market anymore. But then there are other wholesale lenders have the appetite for it.
Got it. So Amy, your operation is on the list for TIC lending.
Yep.
Got it. Good to know. Questions about getting all your contact information. I'm going to put a link to all the slides in the chat. And if you're on your phone or you're driving and you're missing the chat, when this gets posted to YouTube on the SFAR channel, I'll probably be the first person to comment, and I'll do a link to the slides as well there. Okay, so you'll get all this info if you need it. What else would we like to talk about? Hershkowitz, are you in the room yet? He always has something salty to
Rob, there
say.
are a bunch of other questions in the chat that we could definitely,
Oh, okay. Let me see,
many.
Jeremy.
Are you able to click on that and see?
I have limited access to that chat for some reason.
Okay, and can you see the Q&A?
I could see the Q&A for sure.
Okay, great. Um,
Here's one. How will the full review process change the closing timeline versus limited review? Do you need more than 30 days?
No, we shouldn't need more than 30 days. I mean, city in general, we started doing full reviews earlier this year. And so, I mean, we're still closing, I don't know, 21 days. And that's, it's fine. But, I would advise nothing. A lot of transaction times in a condo in a bigger building, they try to go for 18, 17 days. And I just tell them, I try to advise no. I tell them it's just gonna be stressful. It's just not worth it. It's better to give us enough time to get everything done. So the full review is just not, it's not going to, I don't think, extend time. It's just going to be more documentation, like CJ said, that I think a lot of people a lot of agents and HOAs and property management companies are not going to be used to getting asked for. So,
So Michael, I agree with you. I mean, if they ask for that information up front, we're going to be able to move a lot quicker. So if we have all that information on day one and we're not chasing it, things are going to move a lot faster.
Got it. Who would like a follow-up? Who would like a part two? Let's say in 2 months we reconvene. Put a one or a yes in the chat if you'd like to see a part two. Bring these people back together. Give it 2 months. Great. You guys up for that? I think that would be smart.
Absolutely.
Here's a
Super.
question. Do any of you lend on brick foundations?
Hmm.
Yes.
Yes, we
Probably
will.
all of us.
Yeah.
Great. There was a question here also for Julie. Given some of the limitations that Golden One has, uh, how do you uh, believe mitigate that? Do you have lower rates than some other lenders? If buyers are feeling like they're really shopping around for lenders, uh, how do you tackle that question?
I think I answered that
Yeah,
one
you
already.
did.
Oh, I'm sorry.
You did.
Okay.
That's okay. That's okay.
There was one in here. Let me see. Something about still confused on the 10 plus unit projects and with checking no on the form, does that disqualify the project from conforming? From Misha.
I see that. Michael, can you answer that or no?
I mean, this was kind of more directed towards Amy. So we have a little bit of a different process on our questionnaire and it being checked. I mean, we're still going to do our due diligence and check, meeting minutes and other items to see if there was an inspection or anything like that, and if it needs to be inspected at a certain time, we kind of double check that. So, I mean, Amy can go into that.
I didn't see the questions, but I think it is about checking no with no in respect to inspection over the past 3 years.
Yeah, it says, I'm
Is
honestly
that part
still
of the question?
confused about the SB 326 in context of the Fannie Mae requirements. Assuming 10 plus unit project, say a balcony inspection has not been done. According to Amy, you check no on the form and that does not disqualify the project from conforming, question mark.
That does not. For my wholesale lenders, they would not ask further questions. In fact, recently there was a file that I helped my partners. They have done so to answer the question, when they check no, inspection was done in the past 3 years, and it's just smooth selling from there, assuming everything else is uh, conforming to what the form is needed. Um, but recently, I handled a file that the HOA actually did an inspection, and and then meaning that the lender would ask for the inspection report, and there were repairs that is needed to be done. However, the repair is just cosmetic in the common area and it's not related to the structure or any issue with the balcony or any structural thing. And the wholesale lender would be able to just take that report, and even the repair has not been done, we can actually successfully close the loan.
Great. Hey, it's 5 of the hour. Let's give you a chance to refresh before your next Zoom at the top of the hour. Put a one or two in the chat if you can see the link to the slides that I dropped in there. And this will be on YouTube in a few days. And let's pull this team back together in 2 months and have a part two and sort of revisit. Okay, I think that would be helpful. And if you are on a SFAR committee and you want one of your committees, say the forums committee, to address any of these things, speak up, bring it up to the future, bring it up to a future meeting. Jeremy, any other things you want to discuss before we close up?
Just want to thank everybody for being here. We had a great turnout. It's wonderful to have so many great professionals here to help us navigate some of these changes and answer some of these tricky questions. It's good to see a couple familiar faces too in the pack. So thanks again for being here, and thanks for attending, and thank you, Rob, for setting this up.